Hey, what's going on, everyone? This is Sam Kwak, one of the Kwak Brothers, and I've been getting a lot of questions about our HELOC strategy, our accelerated debt reduction strategy. Now, if you don't know what the strategy is, you're like, what is he talking about? I'm gonna go ahead and leave the original strategy training video down below in the comment section. But this video is particularly for those who have checked it out. You guys know what the HELOC strategy is. And I've been getting a lot of questions, and I'm gonna pin out 3 questions that I've gotten so far. Number one being, well, Sam, why don't we just make extra payments to our mortgage than having to go through this whole HELOC strategy mess, right? That's a question that I get a lot. The second thing I get a lot is, well, Sam, aren't HELOCs variable? Don't they have higher interest rate? Well, I'll go and tackle that and respond to you in just a sec. And a lot of you guys also said, hey, this stuff sounds risky. Like, how do we mitigate this? Is there a way to go around? Like, can we actually do this? So I'll cover all 3 things. Before I do, guys, go and subscribe to our YouTube channel. It helps us a lot to push out more videos out and give you guys value. And if you have any questions, go ahead and leave them down below. I do pay attention and I do respond to as much as I can. So go ahead and leave out any questions if you have. So the first thing I get a lot, this is like the number one myth / is like skeptical questions, is, Sam, why don't we just make extra payments to our mortgage instead of just doing the HELOC thing? So I'm going to show you guys why the HELOC strategy is far more superior than just doing the extra payment. Number one, when you make an extra payment on the HELOC, and that's literally what you have left over at the end of the month, what happens if you have an emergency, right? What happens, like, you need a new roof, or you need a new car, tires blown out, whatever. Don't you want some backup, right? And you might be saying, well, that's where the savings come from. Well, the idea here, guys, is you kind of have a dual effect with the HELOC strategy. Your HELOC essentially becomes your new quote-unquote savings and checking account, and any extra payment you put into the HELOC, you can always get it back for those emergencies. All right, so let's go and talk about the extra payment versus the HELOC strategy, and this is something that I get a lot. So people ask me, Sam, why don't we just put the extra money that we have and throw it into the mortgage, right? So 2 things I have to say about that. Number one, what happens if you make the extra payment and you have an emergency, right? If you guys are doing the extra payment with everything that's left over after expenses, right, paying the bills, and all you're doing is taking that into the mortgage, well, what happens? There's an emergency where your car's blown out, you need a new roof, something happens to your kids. Life happens, right? Especially if you have a 30-year mortgage, okay? Anything can happen within 15, 30 years. So the beautiful thing about the HELOC is that a HELOC is an open term, open revolving loan. So you can go ahead and put the money into the HELOC and you can take the money back out for later use. A mortgage, on the other hand, okay, it's closed-ended, meaning you put the money into the mortgage, you can't get it back. Okay, it belongs to the banks, it's gone, poof. Okay, so that's one reason why I'm not a big fan of the extra payment. The second reason why I'm not a big fan of the extra payment, with the HELOC strategy, what we're doing is we're taking all of our income and putting it in the HELOC, right? So you guys might be asking, well, why are we doing that? The reason being is that we do this so that we can lower the average daily balance on the HELOC. When we lower the average daily balance, we also lower the amount of interest that we have to pay. So what we're doing is we're taking all of our money, putting in the HELOC, lowering the average daily balance, okay? But we still have access to the HELOC to be able to pay for our bills, our expenses, and so on. So there's a detailed strategy and there's a detailed method for this. I'm not going to go into that today. But if you guys want to check out more, I'll go ahead and leave the link down below for you guys to go and check out even more. Okay, so that's the extra payment. Number 2, HELOCs are variable and tends to have higher interest rate. Now, not all HELOCs are created equal. HELOCs are known as non-QM loans, which means it's not regulated like a mortgage. Okay, with a mortgage, it's government regulated, so there's a lot of things that have to be uniform, they have to be the same, and banks have to offer very similar types of features and functions. With the HELOC, it's not regulated as such, so that banks have a little bit more freedom as to what they can offer you and what they don't want to offer you. So you can go to Bank A, Bank B, Bank C, and they'll all offer different types of HELOCs. So when you guys are shopping for a HELOC, make sure you go and check out different places, because you guys are going to hear different things from different banks. So that being said, part of that difference is that HELOCs can be variable, but they can also be fixed. Okay, so a lot of people are exposed to the variable stuff. That's why they believe, oh, maybe all HELOCs are variable. Well, that's not true. HELOCs can be fixed. Now, do HELOCs have higher interest rate? Sure, right? But remember, going back to my point one, if you lower the average daily balance in such ways that the interest rate really can't catch up to the principal balance, then you're gonna actually end up paying significantly lower amount of interest. So the banks got your brain to think, got you trained to think that interest rate matters a lot. Well, I'm here to tell you guys that yes, it does matter, but when you're using the strategy in the context of the strategy, it doesn't really matter as much because you're killing down the principal balance super duper fast, where the interest rate really doesn't matter at that point. Cool? Number three, I get, Sam, this HELOC stuff sounds super duper risky. Why do we want to get into it? Well, for one, guys, a lot of things that what you do in daily life is risky, such as driving, flying an airplane. So when you were, like, say, 12, 13 years old, driving a car was risky, right? You have impaired judgment. You don't really know how to do it because you don't know how to drive. You weren't supervised. You weren't trained. So much like driving, the HELOC strategy is the same way. Okay, the more you learn, the more you understand the mathematics behind the strategy, it becomes significantly less risky. Okay, so you probably wouldn't want your 12-year-old or 13-year-old driving around with your car, right? Well, same thing here, guys. The 12-year-old is later turn 16, 17. It's going to go and take driver's education. It's going to get supervised driving time, right? All those things lead to your kid, that 16-year-old, becoming less of a riskier driver. Does that make sense? So with the HELOC strategy, the more you learn, the more you dive into the details and you understand how the math works, the HELOC strategy can definitely be a very effective strategy to help you pay off your mortgage, your student loans, your credit cards, whatever loans you guys have. The HELOC strategy is far, far better, and it's a superior strategy than anything that I've seen. So, guys, if you have comments, questions, if you're still skeptical, go ahead and leave them down below, and I'll be more than happy to address them. And I'll tell you guys what, I do see the comments, and if you guys want me to respond, I definitely can. And again, just to remind you guys, be sure to subscribe to our YouTube channel, give us a thumbs up, and I'll go ahead and leave some other videos down below for you guys to watch about the strategy. All right, guys, thanks for watching, and I'll see you in the next video.
Hey guys, this is Daniel.
And this is Sam.
We are the Kwak Brothers. I hope you guys enjoyed that video. If you want to see more content value that we put out like this, what should they do, Sam?
Go ahead and hit the subscribe button and also hit the bell icon so you guys get notification for our upcoming videos.
That's right.